14, which is the average directional movement index. So what this average directional movement index indicator does is that just like the name implies, average directional, it tells us the average movement or the average direction of price in terms of the strength of the buyers or the strength of the sellers. Now, when the buyers are in charge, or when there's buy strength in the market, price tend to go up. But when there is a weakness in buy strength, price drops. That means sellers are in control. The way the market moves is in two ways. When the market goes up, we can say the market is buying. When the market goes down, we can say the market is selling. Let's take for example, if the market is selling, that means the market is dropping. We can make profit by opening a sell position, so that as we enter on a position and the market drops below our entry, we make profits. The same thing happens when you actually open a buy trade. When you notice the market is buying, or your buy condition is met, you open a buy position. So as soon as the market price goes above your entry, you'll be in profit. So the indicator we are using now is the ADX 14. That's the period, that's the setting. So setting is period 14. Then the style is black. That's ADX itself is black line. You understand? The ADX itself is black line. So that's what tells us the direction, the strength of the direction. You understand? Then this D plus now tells us the direction where this ADX is moving. So when the green line is moving up, that's the D plus line, which is green in color, is moving up with the black line. It's telling us that there's a buy strength. Then when the D minus line, which is the red color, is moving with the black line, it tells us that the sellers or the market is really selling. So it's very, very simple. So when you have the green line moving up with the black line, because remember the black line tells us the strength. You understand? It tells us the strength from 1 to 10, like what's the strength of the market, what is it doing? You understand? So the black line, which is the ADX itself, tells us the strength of where the market is going. Now what we need to do is now we need to play in line with the strength of where the market is going, and that's why we have the help of this green and red indicator. So a green and red line, which is D plus and D minus. So when your black line is going up, signaling strength, and your green line is also going up at the same time with the black line, it's telling us that the buy strength is strong. Same thing with your red line and your black line, telling us that your sellers are in charge. So then we have two levels, level 22 and level 20, or level 20 and level 22. So these are the levels any of the lines have to cross. So these are the levels that any of the lines have to cross to tell us that, okay, we are good to go. This thing is ready to give us some maximum profit. Let's do it this way. So that's the setting basically. Period 14, ADX is black, your D plus, your D minus is green and red, and then your level is 22 and 20. So now let's go to how we're going to take our entry. Now it's very simple. So now here let's take this as an example. The recent trade setup we had, the recent condition. So I noticed this rectangle I just drew here. So let me make it more thick. Yeah, so now at this particular point, this was on the I think this was on the 5th of July. This was on the 5th of July. This is why I say this setup is very sure. But the thing is that you're not going to be trading every day. You understand? It might take only once in a week, or probably twice in a week, before you see an entry condition. It's not about, in forex. Many people trade forex and they say forex is a scam because they lose money. The reason why they lose money is because they are not patient. You understand? That's why someone that is not patient say forex is a scam. But most of these banks, you understand, they don't trade every day. They might probably trade maybe 2 times in a month, and that 2 times in a month they are making massive returns. You understand? So it's not about the number of times you take, it's number of the few times you take and the maximum profit you can get. Now this entry condition happened on the 5th of July. At the point here, if you notice here, at this point here where the black line crossed 20. So sorry, before I continue, so the condition is that it can either cross, 20, it can either cross 20 line, or it can 11 or 22. So there are two levels it has to cross. So once you see it has crossed 20, you can take your entry. And then when you see it has crossed 22, you can also take your entry. But it's better that as soon as you see it in between 20 and 22, maybe 21, or let's just say once you see it has touched 20 and has moved a bit above 20, meaning that is at level 21, you take your entry. So now look at this sell that happened here. Remember I told you when the black line is going up and your red line is going up, it's telling that sellers are in control, the market is going to sell, price is going to drop. So you should be looking at selling, not buying. So when you open your order, let's assume I want to open my order on Euro USD now. So what I should be doing here is I should be opening a sell trade. So what I should be doing should be I should be opening a sell on the market. So if I'm to open a new order, I'll be clicking on sell by market, not buy by market, because from my analysis, like from this thing we're using, it's going to tell us that market is going to drop. So as you can see on the 5th of July, so that was when the black line broke above 20. That's it went to 21, in between 22 and 22 level, and at the same time our red line also rose up. Now look at that will have been, let me go to the candle, so let me show you the level by which you will have taken that trade. So we will have taken that sell trade around somewhere around here. So let me put a horizontal line, so that should be around here. So the sell will have been somewhere around here. Let me use this crosshair to make it very easy and fast. Yeah, so based on the candle, sorry, let me clear all these stuffs. Yes, now, so based on our entry condition, now we'll have taken this sell at this price here. At this price, you can see where the line, this line I'm putting now on the candle. So that will have been where we'll have taken our sell. This will have been where we'll have taken our sell on this candle. Let me add a box there so you see where we'll have taken our sell. So we'll have taken our sell around this place. Yes. So that will have been where we'll have taken our sell trade, because that will have been the point where this red and black line crossed 20 or 22 level. Now look at the drop. Look at the drop from that point. Let me put an arrow. So look at the drop to this point. Now I will still explain how to set your target and your stop loss. You understand? But let's just look at the direction. Now look at the way it's dropped from that 1.12500 to over. It even went as low as 1.11 something. Yeah. So let's go to another example. This on Euro USD works on all pairs. So let's look for another entry. Now this is another entry condition here, based on these 4 hours. So you're not going to be trading every day. You're not going to be trading every day. But the thing is that when you actually take a trade, you are guaranteed that though there's no method that is 100% perfect, but you're guaranteed that you make profits. So this this is another example here of the trade where the trade condition was met, and this was on the 1st of July. You can imagine. So this sell condition came up on the 1st of July, and we probably will come and we'll have to wait. You understand? We'll have to wait till probably July 5th before that setup will now be ready. You understand? So this stuff requires patience. But now there's a way. Okay, I'll still come to that in terms of setting your take profit and stop loss. I'll still come to that. So let's just deal with let me just give you examples for now. So this is a sell entry here at this point where it broke at 2022. So let me put a rectangle to indicate the time where on the count where we'll have taken that trade. So I think somewhere around here. Yes, and you can see the way the market dropped. You can see the way the market actually dropped. That's real big profit. That's like, if someone have a very big account, someone can be making 1 million naira on just this trade at the comfort of your house. The more money you have to trade, the more profit you can make. So imagine someone had, probably that's why you see these banks, they always have money to loan out. They can never go broke. You understand? That's why when you want to borrow money at the bank, there's always money. Imagine these guys now. Let's say, for example, Fidelity Bank, or let's say First Bank decide to say, okay, let's place a buy on the Euro USD at 1.13 with 10 million. We are taking 10 million naira, and this thing drops from 1.133 to 1. That means that they're even making they're even making as high as, in short, they can't make anything less than 5 million naira in the space of just 4 days at the comfort of their desktop. So this setup, it actually requires patience. It doesn't come every time. So now let's look at this another condition now. Look at this buy here. Remember I told you, when the green is rising with black, it means buyers are in control. We should buy. When the red is rising with the black, we should sell. Now this is a buy because the green is rising with the black. So this is a buy condition here. So look at it here. So this is where we'll have taken our buy on the market. So this is it. Now look at the way the market went up. So this thing doesn't come every time, but when it comes, you are guaranteed of maximum profits. So let's go for an example. Now look at this one here. Let's look at this sell here. It doesn't come every time, but at least when it comes, you're sure that you're going to make money. That's just the beauty of forex. It's just that most people don't have patience, and that's just it. That's just it. And the truth is, you can't win all the time. That's just it. You can't win all the time. But the thing is that the little you can get, at least. Now, look at this buy here. I told you we can't win all the time. So assuming we will have taken this trade, this will have been a loss. This buy will have been a loss if you are taking this buy here. You understand? So now, if we are going to take, let's assume that was a buy condition, and we say, okay, let's take it. You understand? So that means that'll have been only one loss on our one part. Looking at it, out of 1, 2, 3, 4, 5 trades, only one loss. So that means that's a healthy. That means you are really good at what you are doing, because for you to actually, out of 5 trade, you lose one, you win 4. That's a very good trader. You understand? Because the thing is, there is no strategy that is 100% perfect. Now, what makes you make money is that you might not really win all the time, but you're making more than you lose. You understand? So if out of 100% you are making 80, that means you're a very good trader. Even the bankers too, they don't win all the time. You understand? They don't win, but the thing is that when they make gain, they make it well. When they lose, but they still recover it back. You understand? So let's assume now on this buy now, let's say you lost $10 on this buy here. Let's assume you lost $10 on this buy now. You can imagine, and then that means out of 5 trades, you lose $10 on the first trade, you recover your $10 on the next trade. The next one, you make $20, 30, 40. You can imagine. So now you lost $10 and you have recovered 4 times of that money. So that's just the beauty about this method. It doesn't come every time, but when it comes, you make money. Now, see this cell here. This cell here. Look at it here, and look at the way it dropped. Look at the way the market dropped. Now this thing works for all pairs. It works for all pairs. And then, sorry, I forgot to even add, news is also very important. Look at this buy here. This buy here went in a very good profit. This buy here, price went up. So price went up here. So that's a very good trade. So that's a very good trade on this place. So let's look at this buy here too. Look at this buy here too on here. Look at the way the price rose. Look at this sell. Look at this sell here. Now let's check. Let's look at other pairs and see how it works on it. Now news is very important. News is also very important. That's one factor. News is very important, because most times news might affect your entry. You understand? So the thing is just it's just good to avoid. That's that site I give you, forexfactory.com. Just try and be checking every day. If any and once you see USD, once you look at this and you see USD, just stay away from it. Whether it's very strong or it's very, don't take any trade at all. You understand? Now, if you look at the USD JPY, this method, this strategy works on it, but it doesn't work on it every time. That's why you have different pairs. You understand? Like, okay, the last time an entry came was last month, a buy last month. The rest, no entry condition at all. So I think it works well on Euro USD. So just be checking more on it on Euro USD. Let's check British pounds USD. So I think for this one it works on it too, like Euro USD works on it. But Euro USD, this stuff works well on Euro USD, but it's just good to be checking on other pairs to see which one is ready. Like, look at this sell here. We had a sell here. Look at this buy here. Look at this sell here. So it works on all pairs. It works on all pairs, but it just be like currently like constantly scanning. Look at this buy here. We have a buy set up here. Look at it. Look at the way the price went up. Then we have a buy here. We have a sell here. We have a buy here. So it works on almost all pairs. It works on Bitcoin too. It works on Bitcoin too. Look at this buy on Bitcoin here. Look at this buy on Bitcoin here. That means we'll have bought Bitcoin at 11,800, taking profit at, you understand? So look at this buy here too. And look at this buy. So it works on Bitcoin too. Look at this sell here. No, okay, it's not below, so we can't take this. Is just a valid buy. It doesn't work. Okay, we have a buy here. This one is under 20, and it went up. So it works on all pairs. Now let's okay, it works on basically all pairs. Look at CAD JPY, Canadian dollar, Japanese yen. Look at it. Look at this buy here. Look at this buy here. New Zealand US dollar. Look at this sell here. And it works. It works on most pairs. So let's go to how to set or take profits. I like using Euro USD because I trade more than other pairs. So I know I told you about when I started trading, how I do take my how I set my targets. Now let's assume let me clear all these boxes so that I would start from scratch. So let's assume I saw this last sale here. Let's assume on the 5th of July I opened my chart and I was looking at the euro, that's the European US dollar, the 4 hours time frame, and I saw that my sell was ready here. Now let's assume I entered the sale at 1. Let me put a line there. Let me put a flat line. So let's assume I entered the sale here at let's say let's assume I entered the sale at 1.12647, which was at the point where my sell was ready here. Yeah, so let's assume I took my sell at that price. Now how do I want to set my take profit? How do I want to take profits? Now what I initially used to do then when I started was that, if you look at your chart, you notice all this box line everywhere, box line, like all this box. So what I do is I mark out a box based on that particular place I entered. So this is what I do. I will just draw a box. There are several boxes, so I'll try and draw a box inside. I'll just try and plot one box. Now as you can see, I've drawn a box. Now you can see I've drawn a box. That's out of the several. Okay, let me make it small so you understand. So let me take it. Sorry. So So you can see what I've done. You can see where I'm trying to reduce the box. That's I'm trying to reduce it into the box. And it's never allowing me to put it on the line. But let me just like let's just I think you get my idea. So like it's just like create that just drawing a box like from here. Just like drawing a box like this, then I'll come down like this. So if I let's assume I entered at this point. Sorry. Oops, sorry. So um let's assume I entered at this point here. Let me move this line. Let's assume I entered here now. So if I'm setting my take profit where I'll set my target, at this point where I entered, it's already inside this box here. It's inside this box inside here. So I'll not, if I'm setting my take profit to be around here, I'll not like to let me put a line so that you understand. So let's assume I entered here. I'll set my target around here. I'll not allow the other this thing to open. I'll not allow it to be I'll not allow the other so this black line is my target now. Let's assume I entered here. Okay. Now the start of that box was this place. You understand? And then that particular box ended here. And then the next box here. And 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 the next box here. So if I had entered inside this box, so I want to get out before the other box opens. You understand? That's below. You understand? So that will be my target. Then my stop loss, if I'm going to set my stop loss will be somewhere that's at the top of the box if I entered inside. You understand? So at this where my stop loss will be, then that'll be my target. You understand? So that'll be my stop loss, that'll be my target. Or if I feel maybe I don't have, okay, sorry. Oh, sorry, I made a mistake. I think the stop loss should be, so let me remove this. So the stop loss should be like here. Sorry. The stop loss should be at the top of the previous candle. Sorry. The stop loss should be at the previous, I entered at this place. Sorry. I entered here. I entered here. Let me change the color to red so that it will not confuse you. I entered at this price 1.12694. You understand? So if I'm setting my stop loss should be at the top of the last candle. That's on at the top of the last candle. That's here. This is the last candle before it. The candle before it. This is where I entered. So this is candle before it. So I'll put my stop loss here. Then my target now is the box. That's if I'm entering here, my target should be at the next box. As soon as at the place where the next box closes, that's where I'll take it. My take profit. Now let me give you another example of a buy. Now look at this buy here. Okay, let's assume I took this buy. Let's assume this buy I took it at here. Let's assume I took this buy at 1.12. As soon as this thing crossed, as soon as it crossed, now that's as soon as it, here, this was where our entry will have been ready. You understand? So I'll have taken my buy at this point. Sorry, let me take it back. So I'll have taken my buy. Okay, let's assume I took my buy at 1.12245. So for my stop loss, if I'm going to place my stop loss will be at the previous candle here, at the bottom of the previous candle. That's 1.12212. You understand? Then my target will be here. This is where my target will be. Remember I entered at this candle. So I want to set my target before the other box will close. You understand? I entered at this box. I entered at this box. So if I'm setting my target, it's not going to. I will set my target before this box here close. I will not allow it to get to the other box here. So look at it. This is how I've taken this trade: stop loss and take profit. So this okay. Let's see this example now. If let's assume we have a sell here at this point now, as soon as it cross. So if I'm going to take this trade, my entry will be here. This is where my entry will be. My entry will be here. Sorry, the red line is my entry. So my entry will be here, somewhere around here, 1.1168. Then now my target should be before. Sorry. So I took my entry here. Okay, sorry. I think my entry should be here, because that's when this black and red went up. So now if I'm setting my target should be around here. I'm not going to allow the candle to get to this next box, as in inside the next box, if I set my take profit. So my take profit should be in between, still be in that box, or I should not enter the next box. Then my stop loss should be at the previous candle. That's, if you notice, the candles here are flat, so I can't use any of them. So I'll just put my stop loss at the highest distance, so that to give it space in case the market want to move, so it give you room, breathing space. Yeah, so basically this is just the method. It works very, very well. So just try and go through it. The setup doesn't come every time, but when it comes, you really make profit. So this kind of stuff works on the 1 hour, but the 1 hour, there are a lot of trades that it's not a sure something. It can happen, it can change at any time. Yeah, so this 4 hours is the method I use, and it works very well. So when I come, I will still show you some other stuffs.